Hello and welcome to this CNBC Africa special on the Monetary Policy Committee meeting on interest rates. I am Fifi Peters. Well, we're just minutes away from finding out what the Reserve Bank plans to do to interest rates. No doubt mention will be made of the political events that unfolded this week. And I'm referring to the abrupt recall of Finance Minister Pravin Gordhan from his investor roadshow in London on Monday and the heightened risks that he could be removed from his post since then. We'll be unpacking what the Reserve Bank is likely to do today, and helping me to do that in a studio are Tim Nyamo. He is a director at Global Financial Innovations, and Lisiba Mthatha, who is chief economist at Investment Solutions. Gentlemen, good afternoon and thank you for joining us here today. Well, it is D-Day, and we do know that the Reserve Bank is finding itself in a tough spot once again. So not only having to navigate through weak domestic growth, but also this heightened political risk premium. Now, consensus is that the Reserve Bank is going to keep interest rates at 7%. Do you still hold this view, especially with what has happened this week on the political front?
Yeah, I think it makes sense for them to stay pat. However, they'll be faced, although there are political issues which require an interpretation, which will require a look on flows of capital, that's will be top of mind. The inflation outlook, it's actually much improved, and therein it will be the topical issue, because when they did their model in the last MPC, they've spoken about inflation falling back into the target range only in the fourth quarter of this year. That is likely to have been brought forward, potentially to the third quarter. I won't be even surprised if they're looking at it around the second quarter. In other words, much improved inflation outlook, which ought to create a more dovish tone from the central bank, citing that they'll be cutting rates at some point.
Just take us through what is likely to impact this improved inflation outlook.
There are a few things at play. One is that Stats SA has rebased the index. The whole basket within the CPI index has been rebased. That has resulted with a lot more food in the index and a lot less energy in the index. And when we look at the trajectory of food prices, especially in the agricultural products, from the wholesale inflation, from the producer inflation, we're seeing in fact a disinflation that has emerged there, around 5% contraction in prices. That's telling us that with a lag, later it will come through with manufactured products, food products on producer price inflation, and later the consumer price inflation could also begin to decline. So that's one aspect. But the relatively strong rand, although it has weakened from its strongest point, it is still relatively strong from what we've seen in the previous MPC, and it has held up his strength. And that creates a positive effect on petrol prices going forward, and also just the imported component of CPI is likely to improve as a result. All that talks about very improved inflation outlook, different to when they sat down in the previous MPC.
So Tim, let's bring you in here. Do you share Lisiba's view that we're likely to see the Reserve Bank staying pat? And also, you know, at the previous Reserve Bank meeting, the bank did say that we are nearing the end of this hiking cycle. Do you expect them to maintain that rhetoric this time around?
Yes, I do think that we're moving more towards an area where we don't have to worry very much about any more potential rate hikes going forward. The rand had been very strong, which was also a plus. It was actually, well, we were now moving into the territory where it might be seen as becoming potentially a little bit too strong from an export or a real exchange rate perspective. So, you know, you could have argued that there might have been a measure of uncertainty in terms of would we potentially see an early cut, you know, even. However, the political developments have taken care of that. And we're now in a situation where I wouldn't expect a hike, especially given the potential uncertainty and the impact that it might have on the rand going forward.
Well, thank you so much. Joining us in on the conversation right now is Azar Jamil, and he is a director and chief economist at Econometrics. Well, Azar, we're talking MPC expectations right now, and these two guys are quite optimistic about what the SARB will do, saying that they're going to stay pat on interest rates. How do you think the SARB will interpret all the political developments that have unfolded in the past 4 days?
I think they will continue to express the same sentiment that they have done in a number of recent MPC meetings, and that is to say that due to political developments as well as due to possible developments in international financial markets regarding US interest rates, they are very wary of the potential for weakness in the exchange rate, which in turn might incite inflationary pressures. So that's how I think they're going to interpret it. So we're likely to get very much the same message. Possibly, I would doubt that they would refer to recent events specifically, but just talk in general terms about recent political developments mean that set up a situation in which the rand might weaken.
So the same message being expected, but I'm sure something is likely to change. And a lot of commentary from economists have been talking about a slight change in the tone of the Reserve Bank. There was an expectation that there would be a lot less hawkish this time around. But because of what's happened in the past 4 days, I have to keep referring to that. There's now expectations that that tone might change. Lisiba, what's your take?
The primary mandate of the central bank is that of inflation. But it similarly has a mandate on financial stability. So the interpretation of the political events is to the degree that it will impact financial stability of the country, which means whether there will be capital flows that could create an unstable banking sector, which will result with a systemic crisis in the country. And as I speak to you increasingly, when I talk to that, it looks like a very improbable outcome. For that reason, they'll be well within their mandate to be talking more dovish, even if there are these machinations that are political in nature. Admittedly, with the Fed having to hike interest rates, does create a very different narrative that would have been an historic outcome. But since 2008, and the hiking cycle that we've seen, and the message from the Fed that is very effective, it has created a room for central banks like South Africa to express domestic policy a lot more effectively. We see it in Russia now. It was seen earlier on in emerging markets. I'm talking about a few months ago in India, in Indonesia. So what we're beginning to see in South Africa now is there is room to actually think about talking a lot more dovish, despite the outcomes in the political realm. Increasingly, when you look at it, it is a remote probability that South Africa will see a systemic financial crisis that is induced by a political event surrounding the national treasury.
Wow. That is quite a view. So are you, the feeling that I'm getting in this room here is that the headlines around the finance minister possibly losing his job, and even in CNBC, Jonas, his deputy, losing his jobs, like as much as they're scaring a lot of us here in the media, perhaps the risk of that happening, or rather the risk of that impacting the economy to a substantial effect, is being overinflated, Tim?
It's not necessarily that. I mean, we've been in this environment where whenever a political event does come out, it does make the rand, dollar rand blow higher for a bit. But what you do know, what you notice if you look at it, is that there's usually the exchange rate. There's a sort of a shock reaction to a change in the rate. But then at the end of the day, kind of everything settles down, and everybody gets back to what they need to do. So in this case, for example, it's not particularly clear as to, is it just a cabinet reshuffle? Is it the finance minister, the deputy finance minister? What are the reasons for it? So, that's why you look at it, just going into, coming into studio, looking at the rand, it was at 12.90 ahead of the meeting. And also, in as much as the rand did go higher, we didn't break 13.25, which is a bit of a key level. If you, in terms of if you're looking for, I suppose, real proper levels of concern. And then on the international side, you've got an issue with, you've got Brexit, which affects the UK and Europe. You've got the issues that the Americans have with their president, where it's like, well, at the end of the day, if you're going to take a bet on our president versus them, like, the differential is not as big as it used to be.
You laugh, as I'm interested in finding out the reason why you find that so funny.
So at the end of the day, you have the situation where, and there was a commentator yesterday on one of the international stations who said, you know, from an international perspective, if you're not in emerging markets, you might miss out. So there's always this thing where the South African fundamentals are still fairly strong. So you can kind of look at it and say, well, I don't want to get involved in South Africa because of X, Y, Z. But then you run into the problem as an international money manager where 6 months down the line, it's like, oh, well, you know, I should have taken a position in whether it's, you know, going long rand or buying bonds or whatever it is. And the other issue also is that when you look at the default swap market, is you can now also insure yourself against potential issues. And I think that also gives a foreign investor a little bit more confidence in terms of how they can mitigate their downside should things go badly. So I think, you know, the Praveen thing is it's quite a serious short-term thing, but in the long term, what exactly is happening? I think in the bigger picture, a nuclear deal is probably a definite nuclear deal is probably a bigger problem because of, you know, the amount of debt that would have to be issued and all the long-term implications of that.
And it looks like a nuclear deal could be a viability if Praveen is removed. But we can't ignore the fact that ratings agencies have continued to raise their concerns around the politics in this country. And we do know that they are set to review South Africa's rating in a couple of months' time. Azar, are you expecting any change on that front, especially given what's happened?
Well, it's not a case of given what's happened, it's a case of given what is going to happen. Because if there is no change at National Treasury, in fact the ratings agencies might view this very positively as the fact that the institutional strength of South Africa has actually been holding out very, very forcefully, and that could turn out to be a very positive rather than a negative. Having said that, of course, the decision to recall the Minister of Finance and the entire delegation, the investment delegation, that was a big negative, I think, in terms of the ratings agencies. But I think we still have to wait to see what pans out with regard to the Minister of Finance. What we've seen today is the rand has strengthened on the back of expectations that the President is finding himself in a corner and ultimately might have to vacate his position, which could ultimately be viewed very positively by the ratings agencies.
And let's actually expand on what Tim touched on, some of the global factors that are happening. So the Reserve Bank has also spoken about the global growth factors with Brexit and the new US president being concerned regarding uncertainties around his policies. Now on Monday we heard that Donald Trump's healthcare bill did not pass, indicating that he's going to have quite a tough time getting through some of the policies that he had punted on during his campaign. Do you think that the Reserve Bank is likely to see the failure of this health bill, which was regarded as a test to Trump's candidacy, as a reading that perhaps the threat of the uncertainties in the US are not so high anymore?
Very much so. I think the big fear was that if Trump actually got his way and started spending massively on infrastructure, introducing protectionist measures, cutting taxes hugely, that could have led to a lot of anxiety on global financial markets, which could have affected the rand quite negatively and the dollar positively. And I think the fact that Trump has had difficulty in getting his healthcare bill through has raised the expectation now that in fact he's going to struggle with all the other issues.